Welcome back, folks. It's going to be a quick review here. This is our daily chart on the dollar index. You can see that we had two areas of buy-side liquidity, as we mentioned the last few times we met. And if you've been following along on my Twitter account, we've been referring to these as well. This morning I did some pre-market analysis. I did some short little videos prompting everyone to consider what I was looking at. We are in rollover week. That means the September contract for futures is expiring, and then we would roll over and do all the trading in the new December contract. Those weeks tend to be a little bit more volatile and cause a little bit more choppiness in price action. And I mentioned how the news that was expected to come out, we had several news drivers at the 8:30 mark in New York local time this morning, and we could have seen it come back down into this little area in here. I mentioned this on Twitter prior to the 8:30 news. And while it didn't do that, I wasn't trying to call the top, but we did go above the high here, and we're challenging this potential buy-side liquidity pool. So that remains to be seen whether or not we get that on Friday. If it doesn't happen on Friday, I think next week will be likely up in here. So with the higher dollar, we were looking for the lower run on euro. You all have been following along on my YouTube channel. We mentioned how this was going to act as an inversion fair value gap, and the consequent encroachment midpoint, you can see how it's been respecting that. We went lower. All of this is hindsight, but the foresight was back here. We were looking for it to run below this low. We saw that happen today. Okay, so we did trade below the May 31st, 2023 daily low, and it happened after running into this fair value gap right there. It opened, due to swing higher, and drops down aggressively. You can see how the British pound may in fact be leading to the same scenario. Here is the sell side liquidity here, so I'd be expecting the market to want to still gravitate towards that 123.08 level for pound dollar. Daily chart on the left hand side for S&P futures, December contract, and NASDAQ futures on the right, its daily chart. I mentioned this morning. I felt that we would likely see the S&P trade higher, run into the buy side, trade through the daily buy side and bell and sell side efficiency high, which is defined by these two candles here, and then up into this fair value gap in the form of a SIBI. This obviously looks like cherry-picked hindsight, but obviously if you're a follower on my Twitter, you can go and see before 8:30 news came out. All of this was explained exactly as it's been delivered to in your chart too. It was delivered exactly as I outlined on the pre-market analysis, short little videos I put on Twitter. So if you don't follow me on Twitter, you might want to do that before November 11th, because after that, I will no longer be active on Twitter. If you are a follower on Twitter, or if you go to Twitter and watch those videos that I posted this morning and you like that format, give me a thumbs up on this video. If we can get 25,000 likes on this video, and yes, I said 25,000 thumbs up, if we get that, I might be inspired to do those types of things on a very short-term upload on YouTube after 2024. So in February, if you like those things, it would be very easy for me to post those and give you my pre-market analysis ideas and where I think the market may draw to. But it's going to cost you 25,000 thumbs up on this video to get it. All right, so the NASDAQ on its December contract, we mentioned how we would likely draw to the buy side here, and to be mindful of the daily inversion fair value gap high and low levels, which is this gap right here. Okay, so I mentioned how ES has done a better job of getting down to a discount, working its levels when I was mentioning it, in contrast to that of the NASDAQ. So it'll be interesting to see how we trade higher and maybe gravitating towards the buy side here, just like we would expect that S&P would trade up to here if it's going to be bullish and continue moving higher. That would be the next area of liquidity that I'd be interested in. the effects of the dollar index trading higher, it's one of those things. I'd like to see the dollar trading lower than seeing the index futures trading higher as a contrast. So that I believe that the most symmetrical market conditions are when they're diametrically opposed. That means the dollar's going one direction and the equities markets are going another. I believe it's because we're seeing a lot of different things going on geopolitically that's causing a lot of, uncertainty. And the markets are still trying to frame a third quarter, fourth quarter transition. So we're going to drop down into the hourly chart. ES, you can see we have the market trading down into its daily buy side imbalance, sell side inefficiency low here on Wednesday. And then today, Thursday, we see an order block on Wednesday. We trade down into that here on Thursday's trading and a fair value gap that's not highlighted. I want you to do on your own chart. The market had all of this back and forth whipsaw type delivery here, and then trading above the daily buy side imbalance, sell side inefficiency high, and then into the fair value gap city that I mentioned on the daily chart that we would draw up into, and we went there like gangbusters today. The S&P reached its premium array, and the premium array for NASDAQ was the buy side liquidity resting above this high here, and the market traded down to this candlestick's tail. Okay, I mentioned this in video before 8:30 snooze. I mentioned I'm watching that consequent encroachment of this tail, so it's half of that right there. That price comes in at 15,531.50. The low, which I'm highlighting for this candle here, the low comes in at 15,531 even, so 2 ticks off from me calling the low. It was in video format. A lot of people saw it beforehand, and it's still there for you to see, time date stamped. So for the folks out there claiming they're the best, you have to do stuff like this, folks. You have to be able to pick the bottom and the top or the high and the low of the day beforehand, and then tell us where it's going to go beforehand. And that's all been explained today. So the market draws up into buy side liquidity here, and we'll see on the lower time frames how these two levels here, the daily inversion fair value gap high and daily inversion fair value gap low, were used as support structures for intraday delivery. All right, let's drop down to the lower time frame. We're going to skip over the 15-minute time frame, but if you look at your 15-minute time frames, you'll see that this low here is higher on S&P than that of the low formed on NASDAQ. So we have S&T divergence. So NASDAQ basically went lower to the low I called for on Twitter, and then we started seeing it rally, and then traded up into all of our buy side liquidity. And there was a 15-minute bearish order block mean threshold, which if you've been following and used the last few recordings I've had on commentary for this YouTube channel, you'll know what that level is. So we went into it and went above it again in here. Look at the 5-minute discount, buy side imbalance, sell side efficiency, high and low. If you've been following me also, that should have been on your chart. And we also have a breaker here. So we have low, high, lower low, trading into that. So again, with the order flow idea that was going to be the low of the day, and bullishness is what we were calling for, it has to drop down to that level first, then see the market reprice higher. And that's what we've seen here, both on S&P on the left and NASDAQ on the right. Moving down into the 1-minute chart here, you can see, again, the S&T divergence higher low than that of the NASDAQ. Shift in market structure. There. Fair value gap between 10 and 11. There's your silver bullet. You don't like that one? No problem. You can trade that one. You don't like that one? Good. You can trade this one. Over here, same thing. The market creates the S&T divergence. NASDAQ trades down to our low, the very low I was calling for. Rallies up. Shift in market structure here. Fair value gap. There's your silver bullet. You don't like that one? No problem. You can trade this one. There you go. Don't like that one? You can trade this one. Don't like that one? You can trade this one. And then trading back up into a previous new day opening gap, high and low level here. And in that 15-minute time frame, order block, mean threshold. So there's a lot of things in here I'm taking for granted that you have done the due diligence of watching the previous annotations and videos and followed me on Twitter. If you haven't done that, then all these levels look like they're added to after the fact, but they are absolutely in the charts before today's trading. They were days ago in the marketplace in my analysis, in my charts, and they were shared both on Twitter and on YouTube commentary here. Okay, so the last bit of business is the trade that I was in today. I used a inversion fair value gap after 1, 2, 3 attempts to trade higher. This is a little classic little pattern I like to trade with. I learned this actually from a book called Street Smarts, and it's classically called the 3 drives pattern, but they had a clever little name for it, 3 little Indians or 3 Indians pattern. I'm not going to argue the semantics about which one's the correct name. I just like the idea of it when it's in a level where I think the market's likely to be sensitive. In other words, where it could repel price going lower. We had buy side over here. We had 1, 2, 3 times driving above it, a shift in market structure. We trade down. This right here, I missed this opportunity. I wanted to sell short here because that's the model 2022 entry. I wasn't able to catch that. So I had to wait for it to trade lower. And in here, I waited for it to trade to the bearish breaker, which is used here, and the inversion fair value gap there. So I went short there. And then I had a technical issue either with my broker, which is AMP Futures. That is not a recommendation for you to trade with them, but it was absolutely and has been a live account. That means it's real money in there. If I make money, it's real money. If it's a loss, I lose real money. So it's not a demo account, okay? I don't know if it was something on their end linking to TradingView or if it was a TradingView glitch. I don't know, but it wouldn't allow me to post my stop loss or my take profit levels. And then when I would try to just do one of them, it still wouldn't do it. So it wasn't a leverage issue. It wasn't an equity account size issue. It wasn't a TradingView settings not toggled correctly. All those things were all good, but for whatever reason, it wouldn't let me manage to trade with a take profit or a stop loss order that I could see on the chart. And I ended up trying multiple times to put a stop and put a take profit in, and then finally moved below this low here. I had moved a take profit level there as a limit order. Well, I didn't see it, and I recorded myself showing that was what was going on. You can see that video on Twitter, by the way. Ended up making $7,400 and some dollars on that, and that was a live trade account. Example, I wanted to trade it down to 540, which would have been just above the level I was calling for. So in the perfect world, had I not been broken in my concentration because of the technical issues with not being able to put the orders in to protect the position and also to put my take profit in, I had to trade and have it manually sit there in front of me, preparing to close the trade if it was going to move against me. So because of that, and I was recording the trade to prove that what I was going to say, you never would have known about it if I wouldn't have shown it to you. Okay, but it was something that I felt that it was noteworthy to share with you as a student, because that might happen in your own trading. And what do you do? So I could have closed the trade entirely and then missed out on the $7,000 move, or I could have let it go entirely, let it stress me out because I was frustrated that I couldn't put the orders in like I wanted it to do, and trade all the way down to the 540 level, taking a partial below this low here, and the math would have worked out where I would have made $14,000 had I did what I wanted to do. But I elected to just take a very close proximity exit to this low here and before here, and that way I could just save myself some mental capital, not worry about it, not stress. And $7,400 is $7,400, right? This low here was the level I mentioned this morning that I'm watching that would be interesting for me. It was the low of the day. It trades down to it, went 2 ticks below the level I called for, and then we saw a dynamic run higher, which was the ultimate rally and directional bias I mentioned for the day. So we would see bullishness, but before it can be bullish, and while we were up here, if I'm saying the market's going to go down here and I'm interested in it, why wouldn't I want to take a short up here? And that's what I was doing. So my intentions were to sell short here, ride it all the way down, take at 540, take at partial here, and then look for the move in here where I can go long and then try to ride the rest of the day. That was my intention. That's what I wanted to do. I wanted to have a heavy hitting, profitable, real money, real live account trade today, just to kind of like, twist the knife in the folks that are out there claiming that I don't know how to trade, that I can't trade with real money, because I am absolutely doing that. There's proof of it. I'm showing it to you. I'm calling the market before it happens in video format where it's time and date stamped on Twitter. It's delivering perfectly. It's precise. And there's nothing like this, period. So don't pretend you're the best if you can't do this. Until I talk to you next time, be safe.